Hey everybody, this is Jim at SB500chart.com. It's a little after 6 o'clock on Sunday evening, July 27th, 2014. My voice is terrible from my sinuses, so bear with me. Before we get started, I need to remind you that the website and the video are for educational purposes only. Nothing stated at the site or in this video is intended to be used as investment advice. I can draw lines on charts, but you have to draw your own conclusions from your own research and make investment decisions that are suitable for your personal financial situation. I'm not a licensed financial professional. I'm just a guy who draws lines on charts. So let's take a look. Starting out on a 30-minute chart where each candle is 30 minutes of trading, you can see that we closed the week at about 1978 after having tagged our 1990 target that we have been calling for ever since the S&P got above this 1900 level. And if we look at this just in broad general terms, it looks like we broke up over this line, rallied up, then went sideways for about three and a half weeks. Then we broke out of that consolidation. But the thing that's a little bit, I don't want to say disconcerting, but it appears that appeared that this trend line right here should have given some support. It really gave maybe a little bounce at one point, but now we are back underneath this line after having bounced on this trend line. Now, just in general rules, a consolidation pattern tends to have a support level that is the apex of where the various support and resistance lines might meet at some point in the future. So I'm going to extend this line and I'm going to extend this line, and let's see what that points to. And the way I'm going to do that is just take a horizontal line and I'm going to put it right on that apex, and lo and behold, that's also where we bounced. There's another thing that you could consider as well, and that is often the midline of a pattern. If it lines up with areas that are technically significant. So I would start probably back here and run that on out to there. And you know, that's not as convincing of some other patterns that I've seen. So right now, I think what I'm pretty content to do is just to wait this out, see where we might find some support. It could be right where we are. It could be a little bit lower. I would not really start to worry, however, until this line right here gets taken out. If this gets taken out, then you remember this was our neckline for our head and shoulders pattern right here. Obviously, the market had 1990 in mind. It made that target. The move to that level from that low at around 1957 or so was in the form of a rising wedge. That wedge did break down. Really the only surprise in the week, if there was a surprise, was the fact that this line right here did not hold. Really, that's about it. We've got this inverted head and shoulders pattern right here. It has a target of about 2004. We are above that neckline. Very possible that we rally. You know, I haven't even looked at the futures yet. It's 6:10. Let me go do that and I'll report back. Hold on. Okay, as of about 6:11, futures are flat. Okay, really basically unchanged. So I guess what I'm trying to say is this. I think we might look at this line right here as providing support. This line is providing support. I want to take these and extend them upwards as well, because they also have a good chance at giving us some support. But with this pattern right here in mind, I'm still thinking we're going to make it over 2,000. We got two patterns that we're looking at. This small pattern right here says 2004. This larger consolidation pattern says 2016. And if anything, maybe getting back underneath this broken resistance line simply tells us it wasn't quite time yet. Usually in these patterns you'll have 6 turns from resistance to support. In this case we had 1, 2, 3, 4, then we broke out. The more typical pattern is 1, 2, 3, 4, 5, 6 breakout. Not saying it can't happen this way, but typically I think you tend to see more turns within a sideways consolidation pattern. So let's see if maybe tomorrow we get a little bit more information that gives us a better indication about what's going on. As far as the week went, we came down. We started the week really after a bounce on a fairly important looking line, not extremely important, but you can see that we had this line in place, and we saw the bounce on this that took place late in the previous week, and the entire week really appeared to be just a sorting out of a sense of direction, wrestling with the possibility of getting back over some broken support lines. This orange line, we were over it for the better part of 3 days, but could not stay over it. So, I just think maybe this breakout up here was a little premature. So I'm keeping my eyes open, essentially with the same outlook that I had 4 days ago before we ever broke out over this line right here. And that is simply to say, if we get over this line again, then I think the 2016 is probably firmly on the table. If we break down this line right here, the neckline of this pattern, at this point, you can't really call this a head and shoulders top, because we exceeded the height of this head. That typically tends to invalidate what we saw take place from this point to right here. So it's going to be a little interesting to see what happens coming into this week. We had a gap down really on Friday. Then we found some support and went sideways. Some people might look at that and say, well, we are now in a little consolidation pattern at around in the 1970s. The question then becomes, is this a consolidation for a reversal, or is this a consolidation for a continued downtrend? Frankly, it's pretty darn ambiguous. If we look at it on a 3-minute chart, I could make the case that we broke out over this line, we're going to head up, okay? Or I could make the case that no, here's our resistance line, and here is a support line. We're in a consolidation triangle, and whichever way we break, above this line or below this one, will give us the clearer hint on what's going to happen next. So with that in mind, let's keep this little pair of lines on this chart. I'm going to make these blue, and let's see how predictive that might be with trading as we open up the markets tomorrow by about, it looks like about 2 o'clock, we'll know. Because we have a convergence of these two lines that are going to happen roughly in the middle of the early afternoon. So guys, I think that's going to be about it for now. Since we did have that gap, by the way, I would expect some gap resistance at around 1986 if we do turn up. I really would expect, instead of the gap resistance setting in right where we closed on Thursday, I would tend to go with this low right here as being a place where we might see some gap resistance. So guys, just want to thank you for watching the video. Thanks for putting up with my failing voice. And thank you for your support. Take care.